the charts of the stocks, I want to show you the charts, and I believe the market has bottomed. All four markets: Dow Jones, S&P, Nasdaq, Russell, and I'll give you the charts and show you the charts in my logic. I basically use patterns and candlesticks. I don't use indicators. I used to when I started trading. I focused on MACD, RSI. That's where everybody starts. I still use RSI, look at MACD and some other indicators, but I'm a price. If you call me what kind of trader, I'm a price reader. I read price, I read candles, I and lines, charts, patterns, see what the stocks is doing, and then I take action. So I don't use indicators as such. So the markets, all right. Overall, the long-term target for S&P is 3,100. Right? It's 3,100. So knowing that S&P target is 3,100, we know when the market doesn't move in straight up fashion, right, or doesn't come down in straight down retracement. So we know what happened last week. Market was crazy, and market was giving us some indications before when it was moving up and down like 100 points in 10 down and then 100 point up after 10 minutes. So that was an early indication. Then when the market started falling, so I was looking at when we could see the market has bottom. So if you look at this Dow Jones chart, this was the first clue right there. Market has bottomed. Now if the market falls or flushes out, it would be a climax. So I think the market bottom right here. I mean, you can see the market came down, right? But the market gave the clue based on this candle. The sellers were here. If you look at this, I took it, this candle, you're seeing it after the day has been closed. But if you look at the intraday, when this candle was forming, the sellers were here, right? And the sellers were here. But you don't know if the buyers have till the market penetrates the previous candle midpoint. So this was a called piercing, a very powerful pattern for showing the strength of the buyers and the market reversal trend, a market reversal candle. This is a market reversal candle. The market opened lower, but the buyers took control. And the reason I believe that the market is bullish on this day because the Dow Jones candle closed up point or at midpoint. So if the candle closes at midpoint after opening lower, that's your first clue that the market has bottomed. So the next day, so on this day, there were some stocks which were moving up. I was looking at Microsoft, Citibank, and Visa, Apple. So there were some names, those who are the leaders, they were moving up. So that was the first clue. So I said, okay, maybe market is bottoming, and I have to be careful in going short. So going short on the stocks is hard when the stocks are going down and the market is telling you that the reverse up, you would get caught in the short. Selected shorts you take, and you have to be quick in exiting. So the two things I have to watch for that. So next day, this candle, this was a neutral, right? So this is a neutral candle, 50-day moving average failed. And so this was nothing. a doji candle. And then this was a flush, again the bearish. So, but it did not close, did not go below this white bullish candle. So, but this was a bearish, very bearish candle. So like a counter attack by the bears. So now what? So this one, another thing is, not only you watch one market, I'll show you the other charts. If one market has not reached the support level, you have to see other markets also if they are reaching the support level. If the other market has reached support, then the others, like out of four, two have reached the major support and the other two have not. The other two will stop the major support and they will also reverse to the upside. I'll show you the other chart. So this candle was the hammer. So I was looking when I have seen in the past. So based on my past experience, I was looking for intraday reversal. I was also looking on Friday when all the three Dow Jones, S&P, and Nasdaq, they are hitting major support at the same time. So if the 2 or 3 markets out of 4 are hitting the major support at the same time and then reversing up, that's a clue that has bottom. So this hammer was formed, and I'll show you the next chart. So this was forming, right? So when this was okay, so same chart for S&P, right? So this piercing candle going up, then this reversal. So this was bearish, then big flash, then came and tested a 200-day moving average. So 2539 right there, hammer formed. So when a hammer is formed, the hammer formed on Dow Jones, it did not reach 200-day moving average. So S&P formed hammer on 200. Dow Jones doesn't have to go to 200-day. Same pattern, hammer. The third one, Nasdaq, same hammer. It came close to 200-day. And this one, Russell, went below 200-day, but close above 200-day. So my point is, some market will reach earlier than the others, and then when they reach, they are the one who are moving and affecting the other markets. So all 4 markets bottom formed hammer at the same time. They were red, intraday reverse, and turned green. So the reversal pattern have formed on Friday for markets, and they had bottom. So I would not buy puts. If I buy puts on any stock, be very, and has to be some special conditions. Otherwise, I look for going long on the stocks. So what are the stocks? So I'll show you some charts, and I'll show you some charts of the trades and the puts. Why we did that? So I have about 40 slides. This time I will skip the theoretical. All these slides I will skip. I'm preparing more theoretical slides to show you. So this was the first one. This is the first one, Home Depot. So Home Depot. So okay. So if you know, or if you believe that the market bottom on Friday in the form of hammer, you would also look for those stocks which formed hammer. Why? Because they were the one who were falling down on Friday, and when the market reversed, they are the market is composed of the stocks, right? The market is not made of in vacuum. So the stocks are the one which are moving the market. So we need to look at those stocks which were showing us the reversal at the same time. So what are those stocks? So I picked some to show you. So Home Depot. So look at the Home Depot. If you see, this is a hammer. So it has the same candle where compared to the markets. So this is one of the stock which I would look at to go long, right? It matches the market. And if you look at the hammer, so hammer tested the low, previous low at 175. It didn't even break it. So this is a double confirmation of Home Depot possibly going up on Monday if the market goes up. So Home Depot. Another one, Caterpillar. If you see that, Caterpillar, same kind of hammer, testing the support. So this is another one. Going up, there's a resistance here at 155, 156, crosses up. Next one, Intel. Intel is also showing support at 43. So if it crosses 44, this resistance line, Intel should be going up. So I'm looking at those stocks which were reversing, showing reversal on Friday. At the same time, the market was reversing. Netflix. Okay, so Netflix, I show you the chart. We traded Netflix on Friday puts, and we closed right at the time when markets bottom. So the thing is, if let's say you are in a and you have a great profit, and if you don't watch and the market reverses on you, all your profit will evaporate. In fact, you would be better off going long. So we have two puts trade we executed same day on Friday, Netflix and Win. We had to take profit, and that was a great profit, like $400-500 per contract. And Netflix target was this line, but we closed early. And the reason was the market bottom. So if the market is reaching the bottom before the stock is hitting your target for short, you have to close short position. Otherwise, you will give up all the profit. So which one is reaching first? Is it the stock or is it the market? Market takes precedence. If the market hits the target and reversing, you have to close the short position. If the stock hits the target and the market is still going down, you have to close the stock position because the stock will form the support. And the Netflix, I give you the reason. So you see this candle, this red candle, this was one, and then it fell, then it found support at this and formed this bullish, you can say a bullish entry. But then look at this one, this guy. This little doji was formed level. So here there were sellers, and then the seller sitting right here too. So it did not break. So that was the first clue, early clue that something is clicks and it can go down. So I was day on Thursday, but I couldn't catch it. So I said, okay, let's see if it breaks this. So on Friday early morning, as soon as it was poking its nose below this line, and it was down only dollar something, I bought puts, and my target was this level. So the target was this level because I was looking for a gap fill. So I was looking for the gap fill, and my target was close to 230. But at this level, 239, 240, 238, when the market hits the support, I said, okay, I need to close the position and take my profit. And the thing is, once you, when the market, because the market is falling so fast, you cannot time your entry with the Dow Jones, with the help of Dow Jones. So I was watching Dow Jones. So you have to flip the charts of the market. Which one is giving you the early clue? Is it Dow Jones? Is it Nasdaq? Is it S&P? Is it Russell? Which market is giving you early clue that market is reaching the support? So it was a Dow Jones which was telling me that the market is hitting the support and I need to close my short position. So we closed the short position in Netflix. So that was, and then Netflix almost turned, like almost reached to the neutral level. So that was the trade. Then win. Okay. So when we had win calls, we traded, we sold here somewhere. Then win fell down on news, Steve Wynn news, negative news. So again, when win fell down, it formed this kind of, on this day, if you need to figure it out beforehand where the buyers can come. So let's say you're watching when it fell down this big time, then it fell here, gap. So you have to know where the buyers can come. So this support, you see this support, how strong this support is. This is called demand zone or buyers area, the support area. So this is a 160 level was the area where you can say, okay, the buyers can come. So all you know is the buyers can come at 160 level. So you put it on your watch list. So what happened? Early morning, as soon as the market opened, wind started flying up. So um, if you have done your homework before, then you just go long. And wait, you can wait for this midpoint of the candle. So we went long on Win on this day. And then Win just went choppy, right? Up and down, up and down, up and down. But imagine this is, as long as it doesn't violate 160, you are still long and it's choppy. And then the news came. This is the news day with the Win, Steve Wynn resigned, right? So it gapped up. So when it gapped up, this is your um, sell day. You need to. So they bought it here, and when the news, you see how the market works, opposite, right? So people thinking, okay, when Steve Wynn will resign and all that, then Wynn will tank, but it did not tank. It tanked already. So it dropped from 200, which was our target, to the point. So they bought at 160, and then the news came that he resigned. It went to 180, and they sold. So here, and probably they knew about the news right here somewhere. They always know in advance. Anyway, so we closed our call position right here. Then, so Win was close trade, but I was still watching it because when there's a major news in the stock, it's going up and down. So you have to constantly watch for new opportunity. So then when the Win broke, we went short same day on Friday, you see here, and it came to close to like 165 area somewhere, and we closed the put same day when the market was hitting the support. So Win and Netflix. So this was the logic. Now Apple, you see this Apple, how solid this hammer candle is right here at 150. So Apple has also bottomed and it should be going up along, because Apple is the leader and all the indexes have the same chart pattern as Apple. You see, strong hammer. So Apple is going up. CVS. Now I'll show you the chart of CVS. We traded twice and made so much money on it. And the reason we traded CVS and WBA puts because of the Amazon news. So Amazon announced with other two companies that they will be coming up with their own healthcare plan, etc. So CVS and other healthcare and Walgreens, they were tanking. So when they tanked, we bought puts, and our target was 72. So this chart shows 2nd of February. So we bought puts, and our target was in this zone right here, and it tanked. So it tanked on this day. We closed our puts on this day, 72. But then, so it was gone, right? But then what happened? On this day, on 8th of February, you see this candle? So the buyers got rejected. So buyers, what they do, they are like a scouting party. They come and scout and see if this resistance, which is at 76, can be broken. So they just test right here. So they tried, but it failed. So when this was forming, this is a bearish candle. So I said, okay, we need to buy puts again. And this time, if it breaks this 72 level, then it's gonna go here, 69, because of this hammer candle. So I based my target 69 here, bought the puts on 8th of February, and also closed. You see how it fell? Just because we spotted this candle right here, rejection. This is the rejection at this price, and it's called upthrust. So upthrust failed, and it rejected and broke this support line, and we bought the puts. The target was based on this hammer right here, 69, and this is what happened. It even broke 69. It went right here, 67 level. So that was the logic. CVS fell. AIG. If you see the AIG chart, AIG is on the same day, the market day, 9th of February, forming hammer. So AIG should be going up. So this is another stock which is on my radar. C. So Citibank on 7th of February, when I think the market was going up, C was going up. So I took this screenshot. Now look at the other charts for C. On 9th of February, again it tested the same low. So it's a double test. Now if the market is bullish on Monday, C should be going up. So we know that 71 is a solid support based on this zone and this double. So C is another stock which is in our watch list. Cisco. Took this chart on 6th of February. Cisco was testing 50 and looked bullish, and it is coming up with the earnings. So this chart looks bullish on 6th of February. Then on 7th of February, it went up further, so it's confirmed that it's going up. But then on 9th of February, it came down, but it held. On 9th of February, it held the 38 plus support. So Cisco should be going up on Friday. So this is another one on watch list. Earnings coming up, I think on 14th. The same pattern for JPM. JPM formed support right here at 105, 106. And this candle telling me JPM is going up. I took this screenshot on 6th of February. 7th of February, it was going up further. Then 9th of February, 8th of February was a bad day for the market, right? And the final was 9th. Then 9th is the reversal day. Again, it held the support. So JPM is expected to go up. So it's on my watch list. Lennar, you see this? Again, 7th of February, so 2 more days. This bullish on the market was up. Bullish. So 56. Let's see what it's doing on 9th of February. Okay, 9th of February. Let me see. I didn't prepare the chart. No. Okay, so it's on the sideway. So it's still, Lennar is on the sideway right now. It's at 59. So it's right here at 59. So if so, Lennar is going up. Qualcomm. So I took the screenshot of Qualcomm on 7th of February. Based on these two candles, I said, okay, I need to watch Qualcomm. And this was this is the resistance zone. You see how tight based on this, and here it couldn't break 68 plus level, and we sold, took some profits here. Then it just went on the sideway. Based on, you see here, it didn't break. So 68 is the strong resistance level. And when I saw this, I said, okay, I'll watch Qualcomm, see what it's doing. So again, Qualcomm is tested the support and it's bouncing up. So Qualcomm is another one we should be watch on Monday. Microsoft. Microsoft. Yeah, Microsoft. I took this on 5th of February. Then it fell down, and it's trading at. Let me see, Microsoft. Microsoft is trading at 88. So it's right here. So if Microsoft holds 87.36, 87.50, and reverses to the upside, is a long candidate. NVDA, we traded NVDA. We made like $1,500 per contract on NVDA on puts, and we trade calls often, but this time we traded puts. And the reason I show you why it was clear that it's going to fall. You see this candle doji right at the resistance at 250. So this was the first clue that this evening star, they call it evening star, they call it doji, formed right here. So that's just an indication that NVDA can fall. But next day, this candle, so I missed this one. This was a bearish also. So you could have shorted here if you see this and your stop is 250 and above. But then on this day, when I look at this candle, it was not like that. It was before this candle was forming. I said, okay, I need to go short on this, and my stop will be above this. So what are the chances that NVDA will go up, then go down, and the market is bearish? So we bought puts right here. Target was somewhere here, and NVDA crashed. Our $10 contract became $2,500. So you see NVDA kept falling and it fell. So we closed. On this day, we sold all our position. We sold some in the middle and we sold all. So when the market opened, this was a bullish candle on NVDA. You see how powerful? So this is a bullish move. So it bottomed right just above 200 level. So this was a bullish. So once we know that the NVDA has formed, the bullish buyers have taken control, we need to look for the bullish side. We cannot go on the short side. It's hard to make money on the short side when you see there's a candle right here, which is very bullish, because they can come back and defend their position. Those who bought, they will come back and defend, especially at 212 level. NVDA, came down, but it's still right. So if these guys bought here, they are still making money. The guys who bought on the top, they are the one who were losing money right here. So these guys at the top, they are the one who are losing money. But if they bought it here, they still know that they have to hold at least 50-day moving average. And next day, the earnings came and NVDA gone up. So now it's facing 250 as a resistance. Twitter, I missed Twitter. I didn't take the trade. It moved big. I just watch it because sometimes just um, miss the trade. You just say, okay, how much it can move, but kept on going. So I said, okay, 27 is the resistance. So I don't buy it. I didn't buy. Then it went up. It went to 31. It gapped up on earning big time. So now it's 34, 35. Now it's sitting at 31. So I could have bought here, but didn't buy. So just showing you the chart. It is going back to 34 and may not. So this I ignored it. This X. So again, X, I took the 5th of February when the market was moving. So still, this is a solid hammer. So it's telling me that the X has bottomed. Now it's a matter of timing the entry. So it's on my watch list, and now I need to time my entry to go long on X. So now X is on choppy mode right now here, but this is another candle telling me on Friday that X wants to go up. So if I see the bullish move up, I would go long on X. CVX, we took the screenshot 6th of February. We went long on CVX and sold calls even though the market was bearish. So we bought and sold. We made money on CVX, but it was a quick one. MU is choppy, but it's showing sign support at 40. If you see this clear support right here, support, this support. So how many support? So this is a strong support 40, and this one was also moving. I think on Friday it was moving up, not much, 41 cents, but MU has a support at 40. Okay, yeah. So you see, 9th of February took the screenshot. Again, same thing happened, and MU was selling off with the market, but then it bounced back up. It went up about 40. So 40 is the strong support. So intraday, the stock can go below the support, but then if it bounces up and close above the support by the market close, is this support is valid. So 40 is support is still valid. Visa, again, Visa on 9th of February, Friday, showing the sign that it wants to go up along with the market. Same pattern, it's hammer, same candle the market was showing. It looks like Visa will go up, and 112 is the support. Amazon. So Amazon, the chart is on my Facebook, and I send via email. So Amazon, when the chart was showing that this is the resistance level 1325, 1350, and if it breaks, I drew the line at that time. 1325, 1350 is the resistance, and if it breaks, it will go to 1500, and it went to 1500 right there. It touched 1500, and then it sold off. So 150 points in a week. So again, this is the Dow Jones chart. So if you look at Dow Jones, it's hammer. It didn't reach the 200-day moving average, but S&P did right there and reverses upward. So again, I believe the market, because all four showed reversal and formed hammer on 200-day. All right, so Monday we'll see what the stock is doing, and I will look for the long side. If you want to take a trial for 2 weeks, you can for 100 and or not 100, only for $17, but only for the first time. If you have taken the trial before, if you are a member, valid, only for the first time, people, traders, $17 for 2 weeks. Send me email, and I send you the PayPal link. And I have a coaching program. If you want to talk about the coaching program, which is 6 months, we can talk for 45 minutes to 1 hour. I'll tell you more about it. I will talk to you, understand your needs, and then we'll go from there. What I show you in the chart is just a glimpse. It's just little like a preview. It's more, coaching is more comprehensive. So the next webinar will be on February 18th at 5 p.m. Pacific, and I'll see you tomorrow. Thank you for coming. Bye.